Hey, welcome back. In today's episode, I'm going to run through what are the typical ways to invest into Bitcoin and depending on the type of investor you are. Before I move on further, I'd appreciate your support into liking and subscribing to my channel as I put in an awful lot of effort to pull this educational and insight content to do with Bitcoin, blockchain and the future of finance. So I'd appreciate your support. So these are the 5 areas or entry points that I have seen. The first one in the list is to do with Bitcoin spot ETFs. So these are ways of investing your fiat money to get the underlying exposure of Bitcoin. This is really precisely what these exchange traded fund products are really about. And it's not just the US have actually approved these handful of Bitcoin spot ETFs. There are 11 in the country. You also have other countries. So who is this aimed for? It's really aimed for those institutional investors like the corporations, even the public and private pension funds, or the government central bank sovereign wealth funds, and as well high net worth individuals. So this is like the investor group that I have been seeing who are really using this financial vehicle to put some of their hard-earned money, cash mainly, into these Bitcoin spot ETFs to get exposure into Bitcoin underlying. That's really what it's about. And what are the advantages of this approach really? It's to provide a regulatory access means into these ETFs for these institutional and corporate investors. It's also a way of integrating your portfolio into making these investments into the ETFs more directly. And the purpose of this ETFs is more long-term investment vehicle to get exposure to the Bitcoin underlying. That's the first instrument. The second one on the list is to do with direct BTC ownership. So typically through even crypto exchanges or more commonly through the hardware wallets path. And this is really aimed for the rest of the investors. So investors like you and I, retail investors, millennials, and Gen Zs are the typical retail investors who are going to be using this more direct BTC ownership and more probably in the hardware wallets rather than holding it in the crypto exchange like Coinbase, Crypto.com, Binance. In fact, we have been seeing for several months the trend. It has actually started being owned and controlled by these centralized crypto exchanges. But we're seeing the rapid decline because these type of retail investors, what they want is they want to take more of an ownership, direct ownership, and more control rather than holding their BTC holdings directly with these third parties, crypto exchanges via the hardware wallets. So this is the ultimate trend that we are seeing for this type of retail community. The advantages laid out here I've just mentioned is to enable them to have direct full control of their BTC holdings, Bitcoin holdings, in a decentralized fashion, and it would enable them to have more sovereign control of their wealth rather than relying on a third party. So in some ways, they are removing the counterparty risk of their holdings in these crypto exchanges by doing it by themselves. Obviously, there's some disadvantages. You may lose your holdings if you're not well equipped to having this level of responsibility at the hardware wallet level. And there are other ways to counter that. I'm actually a direct hardware wallet holder of my BTC holdings because I'm equipped, and also I have my keys stored in a safe location. So if I were to, let's say, die or be run over a bus, touch wood, that won't happen. But if that were to happen, I can be rest assured that my keys, my seed phrases or passphrases that are used to control my direct access to my hardware wallet or my BTC holdings, I can be rest assured that that's going to be easily recovered by my future legacy heirs, right? So there are always ways around that. You might have also heard about multi-sig means. These are like different types of approvals in the custodian chain to manage the actual access to your crypto holdings. So there are other ways, but you need to do your own research to find out if this is indeed the right approach for you. So that's method number 2. The third point is a different classification type of denominated Bitcoin funds. So these are tokenized Bitcoin funds and trusts. So I've put in parentheses real world assets because we are seeing now the next wave of blockchain technology and investment in this space is real world assets. So real world assets is really aimed for digitizing physical analog assets like real estate, premium real estate particularly, arts and collectibles, precious metals, even for certain financial instruments, to have representations of those physical assets onto the blockchain. This is what we mean by real world assets. And Bitcoin have actually started to include layer 2 solutions in the Bitcoin network, offering the possibility to digitize these physical analog assets denominated as real world assets onto the Bitcoin blockchain, right? But it's controlled at the layer 2 level because we want to keep the layer 1 as stable as much as possible and not to be touched by any other type of use cases that the Bitcoin developer community would like to include in the network. So this is really aimed for general investors because the idea behind real world assets is to enable fractional ownership of these digital assets on the blockchain for everyone. Regardless of your financial background or situation, this is actually the intent. I have other videos that would explain in more depth as to what real world assets are, which is all the more reason why you should subscribe to my channel to precisely go through these other tutorial videos or podcasts that I have set up. So refer to that and you'll get a deep explanation and insight understanding as what we mean by real world assets. The fourth point is what we call Bitcoin options on the original Bitcoin spot ETF listed at the very beginning of this slide. The US financial regulator, the SEC, have actually approved the BlackRock IBIT, which is the BlackRock's Bitcoin spot ETF provider, to enable options trading. So the instruments here are calls and puts on the IBIT ETF shares. Now, this is something I wouldn't advocate for the novel investor out there, investors who are just starting out, or indeed retail investors. This is really aimed for those savvy, more experienced trade investors who would like to capitalize on the speculative trading, which is something I always advocate against, right? Because I'm a long-term Bitcoin holder. I'm not an experienced trader, and it's certainly not my intention. So I would tread this fourth point with care. It's really aimed for those savvy trade investors who like to get speculative gains, whether at placing call options or puts on these IBIT shares. The advantage of this approach is to gain upside gains. So whenever there is an increase on the Bitcoin price in any moment in time, there's a notion of placing calls to be able to capitalize on the upward trend difference and treat that as a gain. On the converse, if a trader expects to see a decrease in the Bitcoin price, those traders can put denominated puts on the IBIT shares on BlackRock to such a way that if it reaches a certain decrement value in Bitcoin price, and if it were to go down, they will equally get a gain on the downside on that price as a result. And if it doesn't go down, they will still be protected at their original Bitcoin price in any moment in time. It's some form of like strategic hedging. And this is something that may seem somewhat complicated for the novel investor, but certainly it's what the savvy trade investors are currently doing. And ever since the approval of this Bitcoin options on the BlackRock IBIT spot Bitcoin ETF shares, we are seeing billions upon billions of dollars already invested. So it's really aimed for those savvy trade investors to be able to capitalize both in the upward as well as a downward gain in Bitcoin price. So tread with care. It's mostly for those savvy trade investors, but not for the rest of us. And then finally, you have the MicroStrategy's Bitcoin bonds and shares, right? So you have the MSTR, which is like the ticker symbol for the MicroStrategy shares. And the group for these individuals are, again, mainly institutions and even high net worth individuals. Now, MicroStrategy is in a kind of an interesting moment in their history. It has started out as being a business intelligence enterprise software company, right? So they still are an operating company for that core business. But now Michael Saylor have actually kind of transitioned the company to become more of a Bitcoin treasury company. And what we mean by that is it's amassing Bitcoins at a gradual pace through selling debt, it could be through shares or some other convertible means, to get the money in order to buy more Bitcoins with the idea of holding on to their Bitcoin reserves over time. And, it's really clever, and it offers some few financial ingenuity products that I've noted here, convertible bonds and shares, with the idea of any gains that they get, they not only just capitalize on the gains that they make through the accretive factor. So whenever the price of Bitcoin increases, they would certainly capitalize on the accretion, of the incremental value of the Bitcoin price. They convert that into Bitcoins, into even more Bitcoins. And conversely, if they experience any decrements on the Bitcoin price, well, the shareholders of the company will still be protected because they will use convertible bonds, right, to provide that level of protection whenever the market experiences a decremented Bitcoin price, right? So the advantage there is exposure to Bitcoin reserves And through their financial ingenuity in the company, they are able to offer strategic debt finance growth through these various means. So I can go into more detail as to what those are, but again, I would use the MicroStrategy and the Bitcoin options for the more savvy investors, and certainly for institutions and high net worth individuals to start thinking about using particularly those last two options as a way of gaining Bitcoin exposure. Really, the last option, you may have some questions. Well, what's the difference versus the original Bitcoin spot ETFs at the very top? Well, the major difference is the Bitcoin spot ETFs with BlackRock or Fidelity, they have a limited duration. They're not operating company. There's not something that they can kind of add their own corporate value in order to get extra gains on the Bitcoin. They're just more of a deposit ETFs, whereas MicroStrategy, they have an operating company beneath them, and have these additional financial products to be able to target particular type of investors. And they have huge leverage, i.e. mainly through their Bitcoin reserves that they have, which is growing, as I said earlier on. They are able to provide additional value and additional yield of return of Bitcoin. They claim that for the most volatile type financial product to these shares is they can provide 2x on the Bitcoin price at any moment in time. There are other types of products out there. This is all the more reason why you should do your own research before you make a decision to acquire these different types of financial products through MicroStrategy, right? But nevertheless, it's very interesting. So for me, as a wrap up, these are the 5 different ways of entry into investing in Bitcoin as of today. And this list is going to be growing. So hopefully you've enjoyed today's video. As I said before, I'd appreciate if you can like and subscribe to this channel, as I regularly post some interesting podcasts, anything to do with Bitcoin, blockchain technology, and indeed the future of finance. So I'll see you next time.